Okay, before we dive into the charts and the trade from this morning, I want to talk to you about a very popular topic, or a very popular question I get from beginner traders wanting to become day traders, and that is, what is the best time frame to use for a beginner learning to day trade the market? Now, you know, these chart packages now have multiple time frames, even down to a 1 second chart, and there's absolutely no way I would want a beginner using a 1 second chart. That would be absolutely crazy. So the best thing to do, in my opinion, when I'm teaching new traders is, you know, you want to build that confidence, and you want to be repeating the same thing over and over again every single day, so you get that level of expertise. If you're chopping and changing and looking at too many things, you're going to lose confidence and you're going to give up trade, and we don't want that. So I start people on just 2 time frames. Look, if you can read one chart and read your trading strategy and whatever your edge is in the market, I'll show you what ours was this morning. If you can read that, then over time you can read 2 charts. Now we're getting into multiple time frame analysis. Look, I can read multiple charts because I've been doing it a long time. As a beginner, you probably can't read more than 2 charts because you get conflicting signals. This chart's going up and this chart's going down. What does it all mean? Okay, so take your time as a beginner. Learn one chart and understand the patterns and your edge and your strategy. Then bring in that other chart, that other time frame, because now your edge increases. You've got a better chance of making money. Because on the bigger time frame, which is called the anchor chart or the bias time frame, you know, that price is likely to be trending in one direction for quite a long time. So the smaller time frame is going to give you that trigger to get into the trade, which allows you to have really good entry and good risk reward. So if I'm using, let's say, a 4-hour chart to get into a trade, which I'm sure lots of experienced traders can do out there, but my stop is going to be probably wider and my entry is going to be further away. So my position size is probably going to be greater, bigger position size. Now, we've done videos on position sizing before, guys. So what I want to do, I still want to use that time frame, the bigger chart, but then I want to drill down to the 5-minute chart to get that precision entry, and I could do them multiple trades in the morning to go for my day's money. Yesterday was a nice £1,600 profit. Today was a very nice profitable trade in the German DAX once again. Let's dive into charts and I'll show you what I did. Right, so we're into the charts. I've got the 4-hour chart on the right, and on the left is the 5-minute. And you're asking me, well, that's a big difference, Lee. You've got a 5-minute chart and a 4-hour time frame. Well, I want that, guys, because I want to make a big profitable trade. I don't want to be scalping for 5 points here, 5 points there. And so the 4-hour time frame gives me the signal. Now I've got a trend predictor signal here, okay, and then on the next candlestick it drops. Now that red arrow tells me that to watch out for a drop on the next candlestick, and because it's the 4 hours, I'm expecting it to move quite a lot. But I don't enter on the 4-hour chart. I come over to this time frame, and this time frame's the 5 minutes. So now I've got the signal to short on the 4-hour, and now I've got the entry on the 5 minute. Why do I get in on the 5 minute? Well, the 5 minute gives me good risk reward. If I go to the chart on the right hand side, the 4-hour, and trade it from that, then my stops are going to be wider. My entries are going to be later. If I can drill down to a smaller time frame and go in the direction of where the 4-hour chart is telling me as a day trader, then I can get, as I said, good risk reward on these trades. And if the 4-hour does its job, it's going to be a very nice trade. So yesterday when I made £1,600, you know, I just traded from the 4-hour and entered on the 5-minute time frame. Same with gold today. You look at gold on the way down here. Look, gold on the 4 hours gave us red pro trend system and was dropping for this candlestick and for this candlestick. Well, look at all the 5-minute entries to the downside here. You've made your day's money this morning by shorting and shorting. These confluence of time frames are perfect for my trading. The 4 hour is nice and slow. I get plenty of time in the morning to set up the trades. And then I can go down to the trigger time frame, which is the 5-minute chart. I don't need the 1-minute chart. I don't need the 10-second chart. I don't need the 2-minute chart. The 5-minute is enough for me. Now, most retail traders stop placements as a day trader is around what, 12 points, 12 pips. So if you're using a 5-minute time frame, that is a perfect time frame to get into the trade, because that then can give you a really nice stop placement. All right. So using 4-hour time frames as the anchor, we call it the bias, then getting in on the 5 minutes keeps it really simple. And you might be asking, well, are you using a daily chart? Yes, because I've got the experience to use a daily time frame as well. I can use a daily chart for momentum as well, guys, and then use the 4-hour as the in-between, and then use the 5-minute as the trigger to get into the trade. That is a really nice way to trade the markets, whether you're trading individual stocks or the FX market. All right, guys, hope it helps, and I'll speak to you on the next lesson. Take care.